Okay, all right. Good evening, everyone. Thanks you for dialing in for tonight's IPO webinar. Here we have ICT Zone Asia Bhd, will be listed on ACE market on 3rd of June. ICT Zone Asia Bhd are principally involved in 3 business segments. First, provision of technology financing solution. Second, trading of ICT hardware and software and ICT service. And the third, cloud solution and services. Later on, our ICT Zone Asia management team will discuss it in detail. We glad to honor to have the company managing director, Mr. Lim.
Hi, good evening,
Mr.
everyone.
Hi, Mr. Lim.
Yeah.
And our from SES Global Advisory, Mr. Paul. Hi, Mr. Paul.
Hi.
Hi. All right, let's start for the corporate video. Thank you.
Okay, thank you, Shayin. I will now play the corporate video of ICT Zone just to give the participants some idea of who ICT Zone is.
ICT Zone Asia Bhd has evolved from an audio-visual equipment trader to a key player in Malaysia's emerging TechFin scene today. Through our technology service solutions, we manage the life cycles of IT devices, making them durable, recyclable, and reusable, while optimizing capital costs, productivity, and efficiency. It's our way of building a better working world. In a fast-changing business landscape, it's no longer enough for companies to buy the right hardware. Instead, their equipment needs to constantly evolve along with the dynamic environment. At ICT Zone, we manage the life cycles of our customers' IT devices end-to-end, empowering their businesses to stay agile, productive, and sustainable. Although we started out trading audiovisual equipment in 2000, today, we go beyond just providing our customers with the right technology. Through our Technology Financing Solutions division, we offer flexible, cost-effective rental solutions for ICT technology, provide businesses with ongoing technical support and maintenance, and resell or dispose of their devices when they're done. That way, we maximize the use of their devices and productivity, all while minimizing costs and wasteful manufacturing practices. We believe in cost-effective, sustainable business growth, not just trading devices. As a DaaS provider, we are more than happy to journey with our customers for as long as they need us.
ICT Zone is a technology financing company. We born from tech and continue evolving ourselves hybrid in between technology on environmental sustainability with an alternative financing innovation through our technology servitization solutions.
ICT Zone has continually embraced innovation and adaptability in pursuit of excellent and sustainable growth. A prevailing trend emerged from our trajectory, our consistent upward trajectory in profitability. Year after year, our profits have steadily risen, underscoring our dedication to delivering value and fostering sustainable growth. Our financial performance not only reflects broader industry trend but also demonstrates robust growth and profitability. With a proven track record of delivering results, we stand poised to seize emerging opportunities and drive sustainable growth. Exemplified by our revenue's remarkable increase from 38.9 million in financial year 31st January 2020 to 115.2 million in financial year 31st January 2024. Accompanied by a profit surge from 1.1 million to 7.5 million, reflecting compounded annual growth rate of 31.2% and 63.5% respectively. With a consistently impressive unbilled order book, we stand primed for heightened success, fueled by our unwavering commitment to sustainable growth and excellence. While proud of our accomplishments to date, we are even more enthused about the boundless possibilities on the horizon. The order book, which was valued at 45.9 million as of 31st January 2020, surged to 251.2 million as of 31st January 2024, representing a compounded annual growth rate of 53%.
The decision to transition to the ACE market signifies more than just a change in the market segment. It represents a strategic move aligned with ICT Zone's vision for growth and expansions.
Our comprehensive end-to-end services, passion for sustainability, and innovative spirit empower us to shape the future of technology financing. We'd love for you to join us in building tomorrow.
ICT Zone is confident to continue size up and grow as a greater TechFin company to enable us to continue creating value to our investors and innovating the future-ready technology servitization solution experience.
All right, thanks for the corporate video. Without further ado, we'll start the presentation. Over to you, Mr. Lim.
All right, thank you, Sha'in. So, okay, hi everyone. Very good evening. Thank you for spending your time at this evening. Right, so I'm the Managing Director and CEO of ICT Zone. My name is Tommy Lim. Right, so I think we start with this slide. So it's at the glance side. So basically, I think at the left top corner, you can see that product and services. In fact, if you look at our prospectus, if you had the chance to have that, uh, we are in the running business of 4 business segments. So one is on the technology financing. The second one, as a tech company, we are also focused into a supply of the hardware and the software. And beside that, we also providing a provision of ICT services. And the last one that we had the other subsidiaries, which is doing a provision of cloud solution as a service on the infrastructure and the platform as a service. So, and below from that, you were able to see that our composition technology financing last year performance is contributed easily about 60%, and the others 32% is at trading. So basically, this is our current proposition that because of we are continue focusing to grow our technology financing solution segment. In the later slide, I will further explain to you what is mean technology financing solutions, right? So and you can see our last year performance is that we had achieved 127.8 million of revenue, 9.1 million of PAT, and in fact that 9.1 million of PAT is already as included, the 1.5 million listing cost expenses that had been incurred last year. So if you go back to, because that is a one-time cost, if you add back, actually our performance is easily at about 10.6 million, right? And we had one unique part of the as a tech company, as a TechFin company. So basically, we are having quite a big order book, which is currently as 15 April 2025. We had a 242.7 million of unbilled order book. So this contributed is from the technology financing solution business segment. And one of the highlight also, we are all our back end funding is fully Sharia compliant. That's why if currently we are also in the lead market, so you can see that we are a qualified Sharia compliant counter, right? And of course, we are working with various brand like HP, Dell, Lenovo, and our pricing is only dealing with principal at the positioning of go to market. So, and in the below, you can see we are having a very high EBITDA, which is at the range of 42 to easily at about 57%. And we will be seeing the trend that will be still growing when we are able to, on the EBITDA, when we are able to continue increase our investment of the ICT asset, especially after our ACE listing proceed, right? In averagely, you are able to see the gross profit margin is running at the range of 21%, right, or to 22%. So, and our this ROE is at the double digit, right? So at the latest at 14%, right? And earning percent per share today is at 1.33, right? So this is briefly about one glance about the performance of ICT Zone and what ICT Zone is doing. So let me bring you to the other slide. So I think first thing here, I would like to get all the audience today to understand who is ICT Zone. Right, ICT Zone is a homegrown TechFin model company, which is we are bridging the technology and financing. I think a lot of you may heard about fintech, right? Fintech. So fintech is actually using the technology to how to innovate the financing solutions. So TechFin technically is the other reversing, which is how we use financial model to actually to innovate the technology offering. So that's why we will be able to offering on the flexible subscription models, even pay per use, rental, and leasing. Right, so and it come into totality of the whole piece of the offering to our customer. As I always use the example of like a coffee mix, right? So today I think next slide, you're able to see through the our these various of brand of our iLeasing, rental and DAS 360. Even we had the computer Mura, which is we are a platform that we are able to sell the old devices, a cheap old computer for anyone who are looking for a refurbish. And EasyTech is what we are selling on the supply of the hardware and software. So and on the cloud just now, so is under the cloudified.asia branding. So that is where we are providing the infrastructure platform, SaaS to our customer, right? Next, okay. So you see, for you to further deeper understanding what is a technology financing here. So I think in the conventional model here, you can see that in a lot of time when a customer wanted to turn the supply, the purchase of the IT hardware into the subscription. So they always will look for an IT company. Then they will look for a leasing company, or maybe the IT company will introduce them the leasing company to turn their outright purchase into a financing. So what different here in ICT Zone is our funding and the financing is actually at the back of ICT Zone. So meaning when the customer deal with ICT Zone, so ICT Zone already able to provide us up to 7 in 1 pricing package. So meaning we are able to combine the financing, the hardware, software, managed services, even device managed services, which is one of the system that are able proactively, analytically uh, analyze the requirement and the performance of the devices. And of course, as a security as a service and device recovery services, which is we cover the PDPDA and the latest that we just launched last year, meaning today anyone who ran the notebook or PC or leasing or subscription with ICT Zone, the particular notebook already a neutral carbon. So I think this is still very new, but ICT Zone already ready to offer, especially to the bigger corporation who will be going to have the requirement by Bursa, especially the main board listed company. They are required to report their carbon emission and carbon activities. So that is what ICT Zone is providing under the technology financing solutions, right? So I hope until now you had some idea. So if there's any question, you please you can post that. Then I will explain in further detail. Right. Next. So technically, we're running of the technology financing solution. We are actually having just now I'm telling you the brand, right? So iLeasing basically is a two-in-one. So meaning we are only financing the hardware and the software. So we are like other leasing company in the market, right? Which is we are able to provide a financing of the hardware. But again, the difference here is ICT Zone is the one who are financing the devices. It's not like the other example, meaning the IT vendor or a partner supplier will supply the IT hardware, but the other leasing company is the one who provide the financing. So in this case, we will be the one who providing the financing, and the tenant normally will be at 3 to 5 years. Then of course again we had another second proposition, which is on, we call it our brand as Easy Renter. So under the Easy Renter, one additional value that we are added into the offering is with the managed services, the SLA, and it also can consist of new and even refurbished devices, right? So, and in that also, when it comes to the refurbish, we can provide as short as 1 day rental up to 6 day, 6 month rental. So that we will consider as a short-term rental. So again, a long-term rental will be again is from over the 6 month to 5 years. Then the other branding that we have been taking positioning strong in the market, which is we are able to add on all the 7-in-1 just now that I explained to everyone. So which is we are able to provide the managed device managed solution, proactive analytical, security management, data backup, device recovery, and even the carbon neutrality services. So meaning today any customer that wanted additional value, say example CNCS, they wanted their devices in the carbon neutrality, right? To make a reporting and justification on their carbon footprint emission management. So we are able to embed that together, and the customer only deal with ICT Zone, one vendor, only had one price, monthly subscription price. Then they are only having a single experience of engagement, which is ICT Zone, right? So next. And I think financials. So we had been actually in the market since year 2000, and we had revolved from a small SME. Then in 2010, we had run our first seed fund raise through the interest scheme, and that is where we are having our initial 30 million. And from there on, also we had grow, and we had successfully debuted in the lead market in on 15 December 2020, which is that time is at the MCO, right? And from there on, then we continue expand our funding, and we had continue grow. You can see here, the revenue from 52 million. In fact, just now, if you aware about the video is actually presenting FYE 2021, which is 38.9 million, right? So, and our latest performance last year, we had able to achieve 127 0.8 million. So our CAGR, you can see year on year is easily at about 35% growth. And today, why we are able to have this consistent growth is because of the technology financing solution business model, which is that are able to bring us a very steady, growth performance, right? And as a tech company also, we are also doing a supply of the hardware and software. And the trading segment will be actually helping the company to have another escalation of the growth. So meaning here, TechFin solution will able to help the company to have steady growth. Then trading and supply of the hardware and the software will become an additional escalator to the further growth of the company. So beside that, I think one thing that I wanted to also highlight, which is our business model. So through the technology financing, we are having a funding. Then we buy the new devices. Then we rent it out to our customer. And after 3 years per se, in average today the market is running a rental or leasing or subscription of 3 years. So after 3 years, the device will return back to the company, and the company basically will remarketing the old devices as a refurbished devices for another maximum 2 year on the rental basis, which is cover the warranty and even cover the services. So that is another cycle of very important proposition on how and why ICT Zone are able to consistently grow the revenue and profitability. No, the bigger challenge of this business is a capital outlay. So you need more funding to actually grow the business. So basically, I think what we are having here is very much that why ICT Zone had been continue grow from a small SME raising fund through instant scheme in the lead market. Then today we are looking forward to debut into the ACE market and to have more funding to further grow into the future proposition, right? So I think that is basically getting you to have the idea how and why we are having such a performance from I think from the past 5 years, right? Okay. Next. So as mentioned just now about technology financing in deep, so this is also in the prospectus, is requirement by Bursa to have more clarity to all the investor. So total, you can see here, our just now mentioned our total as 15 April, we had 242.7 million of unbilled order book, right? So, and if you see on the breakdown, so in this year, which is FYE 2026, so FYE 2026 is from 1st February 2025 until 31st January 2026. So you can see on these 3 quarters, in fact, you need to remember here, what you are seeing here is already taking out the first quarter number. Unbilled order book is already clocked in into the financial book, which is our quarterly report should be announced targeted by end of this month before our listing, right? And from here you are able to see we had a very steady unbilled order book. That is why just now I mentioned we are able to estimate, our growth, and with the effort of year on year, and how we can continue up at the upside, and with the CAGR of 35%. Okay. So, and in specific on the segmental revenue, so you can see actually technology financing CAGR is at easily at about 50%. No, and why is at the average of 35 is because had been adjusted by the other segment. Right, so and you can see, and last year our revenue, trading revenue, supply and thing is at the drop. Basically, is at the broad industrial market, that actually the demand of the supply of the technology at the timing is at the decline. And we had seen that this year, although there is a tariff challenge and thing, but we had been expecting the growth basically on the technology, this hardware and the software of the computers, notebook in this year, because of the few factors like e-invoicing, going to be implement even to the SME, right? And this Microsoft Windows 10 are going to end of life support by October this year. And I think continue a government initiative on the digitalization initiative. I think that is also will be continue bring the tractions to the demand, right? So this is what I've been looking forward as well. Okay, Jason. Okay, so financial positioning. So you can see that our total asset had grown, and majority of our asset here especially consists of the devices, the computer, notebook that we have been continue investing and helping the company to generating the technology financing solution revenue and profitability. Right, and of course, again, as I mentioned, one of the key challenge in this business is a capital outlay. We required more funding to actually to buy the computer and to able us to rent it out or lease it out, and even provide a subscription to our customers. And I think when it come here, everyone will have some concern and worried. Mean ICT Zone, it will be a high gearing company, which is true. And but again, is we are holding it with and managing it with two important policy. First policy is that we are managing the 80-20 rules. So meaning we will only take a financing of about 80%, and we are using our own equity funding of 20%. So this is very important to make sure that we are able and capable to manage the cash flow, right? And we are also able to earn some margin from the financing rate that we are charging for up to our customer, which is come from the 7-in-1 component that just now I explained. So second policy that we have been running for more than 10 years, these two policy, which is a one-to-one matching. So one-to-one matching had two segment here. One is we are only will take the borrowing from the bank when we are able to have secured our project or our PO or our contract, especially like government. So meaning when we are having the sales, only we are taking the borrowing. So it's 1-to-1. Secondly, we are also having a policy that when, if say the contract period is in 3 years, so we are only taking the financing matching to the contract. So mean we won't take the position that when the contract is 3 years, we are taking a financing of 5 years. So that is very dangerous. When the other 2 years, then you no longer have the revenue matching, then you still need to serve the bank loan. So that's why this is a very important policy that we have been holding and practicing it more than 10 years since we had been started during our interest scheme time, right? Right. So from the cash flow angle, from what I'm saying just now, that likely you are able to see that you see when we had the net cash from the investing per se, that the FYE 2024 92.9 million, meaning we are utilizing that investing, and that investing is again matching into FYE 2024 in annual capex, which is our investment, which is 96 million. So that is how we ensure that the utilization of the funding, and this is where you can able to see from the cash flow, right? So maybe in the future, in one day, that if you see that the graph should be matching at all time, so then you will know that, hey, for me is not practicing is what have been mentioned during this presentation. Okay, so right, so that is at least I'm sharing how you actually to read our book. Okay, so okay, go back to the our proceed. So I think today our utilization is mainly, you can see here, almost 80% is utilization with the fundraise of 26.6 million, right? 21 million basically would be utilized, no, 80% to buy the new devices. And as I mentioned just now, right? Then you will say, oh, ICT zone only 21 million. How far and how much you can grow? But again, as I mentioned, the rule of 80-20, right? So you see, when rule 80-20 apply here with 21 million, so we technically were able to work partnering with the bank or the financial institution to have another 100 million. That's why you see, although we are only having a proceed allocation of 21 million on equity, but we already able to have another 100 million of funding. So add on the equity. So basically, you are able to see that we should be able to, with this exercise, we are able to have additional easily 120 million of the new funding for us to expand our business, right? So, and with that also 1.5 million, which is easily about 5.6%, is allocating for a sales and marketing expenditure, which is, I think in the past we have been very strong and very focused in the government sector, because like Sek Yen just now before start, she do ask the question, what is higher risk, no, in this business? So my answer to her, and now I'm telling all of you, is at the credit risk. So you see, when we are doing a subscription model, so we are collecting a monthly payment. So we are not afford to having any bad debts, right? And so far we have been managing it very well, right? We still have some little bit bad debt, but easily is below 0.5%, okay, of our total revenue. So that's why when it comes to this allocation, so we are intended also to continue, beside on the government sector, to continue to expand into the corporate sector, right? But again, we will be very selective and mainly eyeing at the proposition of bigger enterprise, MNC, and even the PLC, right? So that's why we are going to expand, and in fact, we are already expanding our additional unit to actually focus into the corporate sector as well. So that's why the 1.5 million is basically is the proceed of that utilization. Of course, the balance will be utilization for the listing cost for this exercise, right? So I think I had explained this. Okay. So our composition of shareholding structure, if you can see from here, majority of the share is holding by ICT Zone Holding, which is our shareholder company, and all the co-founder is actually seated in the shareholding company, right? And only myself, you can see I had 0.02%. That is because when during the leap market, when I had the retail investor, so by that say, for your information, today ICT Zone, which is in the lead market, we already having a 400 retail shareholders, which is they are the one to actually supporting ICT Zone to grow for the proposition of today. And Dato Sri Eng 0.84% is because of the, I think last month, because of the 400 retail shareholder, we by no other choice, our transfer listing from lead market, we need to run a EGM and offering a exit offer. And 0.84 is the exit offer take up that by our existing 400 shareholders who exit before the Ace listing. So meaning it's pretty very small at the 0.84% only. And the rest of the shareholder, I'm also taking this opportunity to say really appreciate and thanks for the trust and the support, and they are continue follow us for our Ace market listing, right? I think the rest will be some others party that have been investing with us for many years, right? And you can see here that we had 4 subsidiary, right? ICT Zone, which is a tech company. ICT Zone Venture actually is a fin company. TechFin Capital currently is dormant. So, but this is where the branding of TechFin is carried, and where we will be having our continued future plan on the TechFin deeper proposition, right? And I think just now I do have mentioned about the roadmap. We had the very clear roadmap in the positioning. We wanted to continue to grow our government market shares. So currently our government market share, we are only holding easily about 10 to 12%. And in fact, with this new proceed, with the new funding, we are looking forward that we should able to grow our market share additional in the government sector, which is up to 20% or maybe more, right? So, and beside that also, we are also looking forward to continue expand our proposition into the corporate sector. And that will definitely able to encouragingly happen for us is because of these 3 identified clearly a roadmap position. I think one of it is about the ESG. I think most of you, I believe, you heard about carbon tax budget have been announced last year. Carbon tax is coming, and every company and organization anyway will not need to align and comply into that proposition. And ICT Zone is ready for that. All right. And of course, I think another hot topic is about AI. So AI hardware have been started in the market. Intel come with his Ultra processor. So, and definite all the company will be starting also to switch over to the latest AI hardware processor hardware. So, but again, what you need to know, the transition is like exactly the same for some of you that may gone through that. When Pentium processor, Pentium 1, Pentium 2, Pentium 3, changing into the i processor. So the same thing starting this year. So the i processor are going slowly I'm looking that within 2 years, 3 years will be fully convert into the AI processor. So in meaning, say in the future, when you want to buy a i processor, you can only come to ICT Zone technically to rent or even to go to our Computer Mura to buy the refurbished i processor. Right? So that's why this is a trend that also cultivate the market opportunity. And the AI processor will be easily 10 to 15% at the higher price point, right? So I think the challenges for the organization company to buy it outright, and it would be a little bit challenge, right? And definitely with the inflation that are happening today and things, right? So I think the other very good option is actually on rent or even on the lease. So that's why we had been really see that this is definitely what we are uh, uh, looking to capture. Right. So of course, I think more longer term proposition, digital transformation, transition, Windows 10, which I had mentioned, is also another traction that how you will increase the demand and our opportunity to tap the market and to help us to grow our revenue and things so on, right? And for your information, in fact, in 25th of March onward, ICT Zone had been appointed and memorandum had been signed with MDEC to be one of their partner ecosystem to support the BDI initiative of MDEC to the SME. Right, so we are very much also looking how this will be moving forward and to able to help us to grow further. So the lastly, what I'm trying to tell everyone here, I think in the previous mention, I have been talking about the market, but again, in the TechFin business model ecosystem, ICT Zone technically we are not selling technology, right? Beside our trading and supply. So in the technology financing solution, basically we are providing a technology financing solution ecosystem, right? So which is we can work with any principal, we can work with any our partner peer, no SI company who are having their own solution, and to help them to how to turn their solution into the OPEX model, into the subscription model, to collaborate with them to go to market. So meaning today ICT Zone strength is in PC market, PC meaning computer, notebook and thing. And at the same time, our strength is also moving into the cloud as a service. And in fact, with the IoT, AI, 5G, we have been also looking as long as the tech, basically it will able to meet into our technology financing solution business ecosystem. So meaning in simple conclusion to everyone, so it's not about market only. Our opportunity is also about other vertical segment in the technology that are able to provide as a service model, right? So that's why product servitization it become a key word here. Okay, I hope by saying this, so everyone is understand. I think that should be end of my slide, right? Question. I see that we had some question here.
Let's start for the Q&A section.
Yeah.
The first question is the business shifting more toward to recurring revenue stream, and what portion of current revenue are in the base?
So I think just now if we can go back to that slide, Jason. So yes, the answer is yes, right? So we definitely wanted to continue to further grow the revenue, recurring revenue. Technology financing revenue is a recurring revenue. So you can see our traction is at CAGR of 50%. No, year on year. And why ICT Zone wanted to grow from lead market, transfer from lead market to ACE is because to continue size up and continue to increase our fund size, right? So, and with that, basically we are able to continue and steadily able to for our investor to able to gauge our performance, right? So if you ask me what is a performance, confident performance, so for the past 5 years, in fact, if you are able to look at my performance during the interest scheme, so my performance, ICT Zone performance on this CAGR is already easily 10 years, right? So it's just that this business is really required a high investment. So it's not very easy, but I think so far myself and the team, we had managed to break through. And of course, again, thanks to all the support of the investor who are actually investing to us. So then that is our result, right? And proportionate, you can see that easily at 50, 55, 60, or versus the other business segment. So that is the proposition of the recurring revenue versus the outright or supply revenue, right? Uh,
Check in, you're muted.
Check in. I think you off your mic.
Yeah.
Oh, sorry.
Okay.
Okay. Just now you mentioned the technology financing revenue is your majority income, right?
Yes.
And what is the difference between leasing and rental?
Okay, leasing and the rental, that's why you go back into, no, we do rental, we also do leasing, we also do subscription. So leasing mean is only 2 in 1. You remember coffee mix, right? Everyone, I think, drink coffee here. Or no, if no, will drink a teh tarik, no, or teh tarik, or 2 in 1, 3 in 1. So leasing, you remember, is 2 in 1, meaning financing the hardware and software only, without the SLA and without the rest of the value added services. So with that also, I want to take this opportunity to help you to understand. So can you go back to the 7-in-1 slide? Okay. You see, when you look at this slide, right? So what is the best part of ICT Zone profitability is in each segment, we are able to make a margin. So when a customer wanted a 7, until today, none of the customer taking 7-in-1s at the moment. So say they are taking 4-in-1, right? So they are taking financing is kind of default. So hardware, software, the managed services, say they are having the security as a service. So mean we are making some margin in financing. Of course, as a tech company, we definitely able to make margin on the hardware and software. And we, as one, they wanted the SLA. So depend on SLA, we are also making margin from the services. So security, of course, again, we will make some margin. So that's why we are able to have the average. If you look at the slide just now on the profitability, you're able to see, our gross profit margin on the technology solution is easily, this you're able to see the I think the other one we don't show, right? So why we are able to achieve an average gross profit margin of 20%. I think if we are a pure supply company, our profit margin definitely will be in a single digit. But that is not for ICT Zone. That's why you can see just now, I think in the glance, right? Maybe Jason, you go back. Yeah, you can see, year on year, our gross profit margin, we are able to very steady at easily at 20. At the lower previous year is at 17. So because our contract is smaller and our trading is higher, right? That's why, and that is also the funding hiccup lah. So that's why I've been continue talking about so much funding is important for us. That is the reason why we definitely no other choice. When we want to grow, we need to size up, which is that able us to have more funding. No. So if you look back to another proposition here, I think can you go to the balance sheet, Jason? Okay, right. So you can see here from the balance sheet itself, the asset have been continue grow. No, and in fact, if you study our prospectus, you can actually get it over the web and things. Hope you had the hard copy. I think Rakuten also had the copy, right?
Yeah.
Yeah, right. So then, or you can actually call the company. You can get the copy from us also, right? So basically, you were able to see that total today before the proceed of 26 million, 26.6 million, ICT Zone equity funding is already at about 70 million, right? You can see. So with the rule of 2080, so technically, with a new proceed, so we should be able to meet easily at almost 100 million. So with 100 million mean here is we should be able to do a size of and get a funding of another 400 million. So that's why I think maybe some of you had heard, had seen, I had made a statement in the market, and some news came out that we have been eyeing in these 3 years, coming 3 years, after our ACE debut, to have an unbuilt order book of 500 million, right? So And that is durable is because after the proceed of ACE listing, we are already able to have 100 million equity funding, which is allow us on the rule of 80-20 to have another 400 million of funding with the financial institution or any midterm notes and things so on for us to grow our proposition. And for if you seen that currently our unbilled order book is only at about 250 million. So technically it's a one-fold, proposition at least. Okay.
Okay. And okay, the next question is asking, can you share the margin across the three revenue segment like leasing, trading, and services, and which segment is the better
Yeah.
margin?
Of course, you can see I mentioned no the technology financing is the best margin. So our gross profit margin is in average about 27%. In fact, that one, if you look at the prospectus, you are able to see that is disclosed. And of course, trading margin is at a single margin. And I think you will see that the services revenue is pretty very small because this is the piece that we are yet really focused. And in fact, we always will bundle it together with our hardware. So to provide it as a easy rental, so as no a 3-in-1 package to our customer. Is it we just purely do services. We hardly do purely do services. We always wanted the customer to have the hardware and the financing together with the services. So that's why the services are mainly pretty small. Of course, the CAGR become greatest lah. Then the other segment that which is at the cloud solution. Cloud solution is still pretty new for us. We just took them in 3 years ago, and currently they are growing, slowly growing. And in fact, what Cloudify is doing, of course, in terms of profitability, I think Cloudify cloud services will be at the highest, right? But again, Cloudify is the cloud services is still at the just only taking about 8% of the total revenue of the group, right? So and we also looking forward that this will be a segment that we should be do more and able to contribute more to the profitability and the revenue of the company.
Okay. Okay, this asking for the peers. What are ICT Zone Asia competitive advantages compared to other provision of, just like you mentioned, technology financing solution industry in Malaysia? They compare like ComAsia.
ComAsia with us is for me is a totally different proposition. The advantages here is is can you go to the slide that the 7-in-1 slide. Okay, so as you see conventional, a lot of tech company is doing a conventional way. So ICT Zone key strength is a technology financing solution. Please help us to promote when people ask after you had listened to me today. Know who is ICT Zone? ICT Zone is not a pure tech company. We are a technology and financing company. Why? Is because that we are able to leverage in two proposition to go to market. So that is bring us in a very unique and not comparable to the rest of the other player. So by saying this, then we need to talk about our competitor, right? So technically also ICT Zone will have two side of competitor because of our two proposition as a tech and as a fin, right? So as a tech, basically we are competing with the rest of the IT reseller, system integrator. But again, so we compete mainly from the supply outright and thing. Yes, we compete because that is a very straightforward model. That's why ICT Zone wanted to focus in the technology financing solution, and the fund that we raise is actually 80% is utilizing to continue expand this segment, and by that then we are different with them again. Right, so because we are having a fin positioning, so the other side of the competitor is at the fin, so which is we are why we are a homegrown technology financing solution company is because when come to the fin, we are actually competing with a MNC leasing company, right? Which is like no Oryx, uh, even HPFS, no, even Hitachi, Mitsubishi, Mitsui. So mainly is a company, NEC Capitals, mainly is those overseas company. But again, this company basically is a financing company, a pure financing company. They don't mainly take positioning in the hardware. No, they are not a tech company. So again, they are not aligned and same with us. Right, so like ComAsia, basically, I think if I'm not mistaken, ComAsia is doing some e-commerce business, some retail, if not mistaken, right? So again, the approach and how we go to market is different, right? I hope I understand. I answer that question.
Yeah, you explained clearly. Thank you. Okay. To what extent is growth in revenue supported by expansion in the order book compared with one-off contract?
The best proposition to what extent is growth in revenue? So okay, so I think I understand it in this way. I hope I'm right. So your question should be asking what is the advantages of no growth from the order book. You see, when we are able to build on the recurring business, we invoice the customer on when we are able to win 100 million contract. The con part here is we are not able to recognize the 100 million in the year one. So if the contract is running 3 years, so basically we'll be scattered recognizing the revenue in 3 years. So mean if put it more easier to understand, 120 million. So mean our first year we are only able to recognize 40 million, although the hard work is already at 120 million, right? But again, the good part here is when anything goes market not ready, not steady, like tariff, right? So we are steady. Even during the COVID time, ICT Zone, instead of growing the revenue, growing the profitability, instead of infected by the COVID. Even Trump today, Trump making so we would technically would not have having an immediate impact because we already had the hard work, bring forward hard work that from the past year into the year. And when we had more time compare other peer to actually to adjust and to take the market impact, right? Because we already had the order book that we are able to continue take in the revenue, right? I think I answered that. So that is why you're able to steadily, to grow. In fact, if you look at our unbilled order book, right? So you go to the order book there. You see, take it a very straightforward example. I think you had seen my ICT Zone performance last year is 127 million. So what you see in FYE 2026, you are already seeing that we already able to clock in when this, because it's unbilled. So in FYE 2026, meaning almost this 80 million, we will be already assured that we will be invoiced because the contract already in hand, everything is already on the run. So, and this is only the 3 quarter because first quarter we already clocked in. So if you go to our ICT Zone annual this second half announcement report, then you will see and you will able to see the differences, right? So which is technically I can tell you here is already easily already meet 100 million. So meaning from beginning of the year of this year, ICT Zone already had a book guarantee of easily 100 million. So meaning me as a CEO who plan the forecast and budget, do I need to start from zero? No, I'm starting from 100. Right? So that is to answer your question.
Tommy, if I can chip in a bit, right? Since you
Yeah.
mentioned about this, why not you also brief the audience, like what's the market size that you're talking about, especially government side?
Yeah. Okay. Why just now I mentioned that we are only holding having a 10 to 12%. Today the government sector for the past 3-4 years ago already at 1 billion market size for technologies, hardware, software, PC notebook requirement. And that is not inclusive the MOE project, right? So meaning the rest of the agency actually already had the demand year on year at easily at 1 billion, right? So that's why but again, because of our limitation of funding, so we only are able to capture at that proposition of 100 to 120 million in the past. That's why we have been so much looking forward. I can actually settled the IPO process, the transfer process. Actually, to me, I think maybe some of you will say, okay, going for ACE listing, so is another milestone. But to me, and I think to my team, this is part or parcel of our process. We have been in the lead market and we have performing, and we have been looking forward to transform, to have size up, to have more funding, and we want to grow further, right?
Okay. Okay, the next question is asking, how do you manage the residual asset risk for device return at end of lease?
Residue manage.
Yeah,
How
residual assets risk of device
how
return.
does you manage residual asset risk for the device return at the end of lease? Oh, actually, if I explain in more detail, then I'm telling you my formula. So I won't how I want to explain this. So basically we had the formula. Okay, I think I can only explain in this way. We had a formula how to very prudently to actually to recognize the residue value of the asset to manage the residue asset risk. We had been actually running this business since we started in 2003 doing a short-term rental. Then after that, we had been raising fund and start moving into a long-term rental. And even during 2010 to 2020, which is we are having honored to have 1,000 investors who invest. Then we had the fund of 30 over million. And in fact, we had experience and pay all the tuition fee during that regime. And in fact, we know the formula very right and how to manage it. So I think I hope this satisfied you with that question. Very sorry.
Okay. Okay. Mm,
I think I try to add on
ah,
a bit. So the residual assets, right? After the assets collected back from the customers, ICT Zone has the capabilities or competitive strength to refurbish it and remarket it into the secondary market. So the secondary market, you can see if you refer to our prospectus, for example, when we do trading, right? We trade the ICT assets, new ICT assets. Also, we trade the refurbished ICT assets. You can see the GP margin for the trading of refurbished ICT assets is much greater among all the segments. So that is a very good and effective strategy in managing the residual assets. So the residual assets like this, after we fully churn out all the profitability multiple times from the first day of the new assets purchased from the distributor until the last day that we refurbish it and cannot be market anymore, they are still able to sold through the IT resellers in the secondary markets at some fair gain that we can recognize into the P&L. I think, Tommy, am I right?
yeah. From the commercial angle, yes.
Yeah.
Mm.
okay. Quite clear. And how many years of depreciation is the asset you acquire to be leased?
Good question. I think you must be very familiar in this industry. So we are having a very strict policy, which is the depreciation will be matching the contract period. So say if the contract is running at 3 years, so we will be matching the depreciation along the years. Of course, some peer actually doing beyond than that, right? But I think we have been very prudent because we do not wanted to have a roller coaster in our book performance, right? Because it's very important. If we clock the depreciation much lower in the contract period, yes, you can have a better performance book, but I think end up it come back at the end of the contract, even at the point that you are disposing the asset, right? So you will be having a higher value, net book value, but again, you are not able to dispose the asset or the computer at the end of life cycle at the better value. So meaning it end up, you will cost you a huge uh, this loss of disposal, and that will jeopardize the performance, no. So, and we have been, as mentioned again, no, we had gone through what had been need to be going through. That's why ICT Zone have been very prudently and very disciplined into managing this piece.
Okay. And then also another question is asking, how do we mitigate the default risk, especially when your customer bankruptcy cannot return the leased device to you?
When your customer bankruptcy.
Yeah, they cannot give back to you the device.
Oh, currently, in fact, first, I think before come to that, right? So we are always very stringent and selective in the uh, uh, approving our this credit on which is the customer and things so on. And I think especially to the government sector, basically we don't have that issue. Then into the corporate sector, basically we are very choosy. That's why I think some of you may know ICT Zone. You will know that is from the corporate angle, it's not easy, because we will do the credit check and things so on. No, not only on the financial book, financial performance angle of the company, of our customer, but also on how they run their business and what type of business and things so on, right? So that is, I think, number one, which is important. And secondly, also, we were not looking at this company which is mainly come to us because of the financial constraint. So we always wanted the company that come to us is because of our value 7-in-1, right? Which is whether from the managed services angle or from the device management or security as a service, and even the CNCS and things so on, right? So I think that is also where we will be taking position, how to mitigate and to minimize the default risk from our contract. So that's why until today, although we had easily 30%, right? 30% of the contract is actually, or 23% here, you can see 23, right? Others is yeah, about 23% is actually come from the corporate sector, but we are only having mainly less than 0.5% of the bad debts. No, of course, again, if the customer still had not able to pay, we will definitely will have the process of the legal and things so on to recover the asset and to recover the outstanding payment.
How about the net gearing? The net gearing currently is above 1x,
Yeah,
right?
about 1.3 or 1.4.
Yeah, do you
Yep.
have any plan to like reduce it?
In fact, we will not, as we are continue grow, frankly to mention here, our gearing will still continue above 1, because we wanted to continue size up. But although the gearing is agreeable, the gearing is one of the measurement from the accounting and the financial. But as I explained earlier, right, we are always to ensure that the utilization of the debts is actually matching with the revenue. You see, it's just in the accounting standard, we only can put in our this unbilled order book in the notes of accounting, but we cannot recognize, the accounting policy are not allowed us to recognize our unbilled order book in the balance sheet even. So that's why you see, when these are not able to, based on the accounting standard, that we are not able to put that in, so our ratio definitely is high, right? But again, is we already having a ready revenue and the collection versus to our debts. Actually, if we are allowed or accounting standard that are allowed, but none, sorry to mention that I had actually trying to break through this, but none of the accounting standard, whether AMPER or MFRS or IFRS, are allowed the company to actually put in the no the future income. No, you need to put in the future liability into the balance sheet, but future income you cannot. So if you put in this 242.7 million in our balance sheet, then you will see we will definitely would not have more than one gearing ratio. Or so that is how I can really explain. We know that is the one of the measurement, key measurement, and in fact that is one of the part or parcel of the business also.
Yeah, can understand that.
Mm.
Mm. Okay. Is this question asking the current customer concentration risk? Are there any client contribute more than 10% of total revenue? I think most of the revenue come from
Okay, so if you
government.
look at our prospectus, you will see we had three major client. Good question, in fact. Thank you for asking this, because I had seen one of the tomorrow I had the webinar on the Mandarin. So some of the analysts have been actually mentioning the risk, or one of the risks of ICT zone is actually having a five single largest customers, right? But I want to take this opportunity to explain that, right? Which is, yes, the answer of this question is yes, we had more than 10%, which is we had the three strategic partner who are actually in our prospectus recognized as our customers, right? As our major customers. But again, that three companies, Staza Corporation, Jurico, and even Heineck, right, is our strategic partner. So why we call it strategic partner? Because when we are entering the government contract, so we are actually taking proposition to work together with these three strategic partner, which is MOF registered 100% Bhumiputra company. And if you look at the prospectus, you will know that they have been actually working with ICT Zone close to 20 years from day one, actually, in the other way say, right? Almost day one, not day one, right? So, and we had built a very strong relation, and sometimes market I've been saying we are together, we are in one, but they are very independent, so they operate their business. They are on many, when they win the government contract, they manage the services and things so on. So that is how they take positioning on their profit, and they are collaborating with ICT Zone. So we will take the asset, we will take the financing, and we are working together. Beside two of us, we also will be working together with the principals. That's how we win the proposition in the government sector, right? And but again, they are ICT Zone direct customer. So we cannot recognize their government contract or government customer is ICT Zone customer. So that's why we are definitely having that. So that is what I'm also taking this opportunity to further explain on this.
Okay. From this, could you elaborate what is the difference between the channel partner and strategy partner? Just now you said.
Yeah,
Yeah,
just
for
now I
our
have been mentioned. Strategic partner is we had the specific agreement signed on certain term, that on the governance, on the risk, on the payment, and things so on. And compared to the channel partner, mainly it will be the one that would not strategically participating the tender together with us and the principal, and they will go on their own. And when they win the project, and they wanted a financing, then they come to us. Or they wanted to buy the hardware or software or refurbish devices, then they come to us. And to resell it to the customer, then that is channel partner. So that is the differentiation.
Okay, thank you. I think this question already almost just now we discussed already.
Which question?
Yeah. Your leasing business is lending money to customer. Not really understand the business model, but according just now what we had discussed about the question, I think already.
Yeah,
get it.
actually, there is one blogger or analyst had been actually having a post in Facebook yesterday. This I think I really wish you all that maybe you all can come to my Facebook and have a I do share that his post. In fact, he had been truly really understand in deep of what ICT Zone is doing. All right. So although it's in Mandarin, I think you read that, you will know what exactly ICT Zone is doing. And for me to answer you as simple that we are bridging a technology, we are a technology company who supply the hardware and the software, but not only supply or selling, but our focus is on turn it into an OPEX model subscription, right? So pay per use, meaning it's like now today on music, right? You go to Spotify, you pay movie, Netflix. No, maybe your house is also using the water dispenser, so you are paying it monthly. So it's almost the same, right? So, but again, we are not only financing, we are also providing a value added like the security as a service. So meaning we bundle everything together all in one. So that's why I'm trying to explain here is like a coffee mix, right? So some people would like wanted to drink mocha. So some were wanted to have sugar, you know, and even creamer, maybe add ice. So that is how we can actually bundle everything and sell to you at one price, and you only pay us on monthly basis.
Okay. And the next question asking the outlook about this company, like how is the company positioned to benefit from Malaysia digital transformation e-government initiative?
How?
How is the company,
Oh,
like providing the
how is the
outlook?
company position? Okay, which is I think this is related to what I have been mentioned about the MDEC proposition, and in fact, what we have been looking forward, we have been able with as a technology financing provider. Say example, SME wanted to roll out e-invoices, so technically you may need to invest the hardware, even the software. So basically, we can come in to supply you the hardware and supply you the software, and the software maybe you had your vendor, so we can even collaborate with your vendor and provide you in a subscription model, right? So meaning by that, instead of you need to maybe pay a upfront of maybe 5,000, 10,000, so you don't need, so maybe you will run it at 24 months, you can run it at 36 months. Then of course you need to agree that you need to pay the financing, the rate cost a bit higher, no, and thing. But you anyway, you at any point you are at maybe easily at 1,000 or maybe a 500 ringgit, you already can have the device and you can have the software and you can move on with your e-invoice. So that is one of the example, use case that how we can help the digitalization transformation for the e-government initiative.
Okay, this means more and more people will need for the computer and then they will come to you in the future.
Yeah, meaning what we are able to help the initiative here is instead you want to transform into the digitalized, even that e-invoice is one of simple, even to your office automation and things so on. So you if you buy outright, so you will be at the one off, right? You need to pay. Of course, again, you can go to the bank to take borrowing, but again, you borrow from the bank, then you pay the vendor, so you pay installment to the bank. But what different here is you come to ICT Zone, we can provide you the hardware, even the software, the solution that you wanted, technology solution that you wanted. At the same time, we also can finance you. So that is a different. That's why I'm trying to explain in the earlier slide, right? So traditionally, how normally people do and how different ICT Zone do. In fact, generally in the market today, we don't have much any competitor. There is some player that have been also starting to do the same thing that we are doing, but they are yet at ICT Zone size. We are the only one that are at this size, homegrown at this size.
Okay. And what is the interest rate charged per annum for your liability and any dividend policy?
what is the interest rate charged per annum for your liability? Oh, okay, finance cost. Okay, so you're asking about finance cost. So currently our finance cost is easily at about effective rate of 5 over percent. Even we have some financing rate that are already able to get it at below 5.
Okay.
So,
Um,
and the other second question is about the dividend policy. Yes, we had the dividend policy up to 20%. You know, so I also wanted to pay more dividend actually, because I'm also holding quite substantial share, right? When the dividend declare, so that I can officially had the money, extra money beside my salary, right? To my pocket also. I wanted that actually, because if why I say this, if you look at the structure of the shareholding, you know, Tommy is not the major shareholders. I'm the second largest. I'm the one who running and manage the business and operate the business and grow the business, right? I had major shareholders, Dato Sri Eng, which is majority is the funder, right? He is the major shareholders, right? Of course, I wanted the dividend. All right. So that's why also we had the dividend policy of up to 20%. Mm. Although not very big, but I think that is a good start.
okay. And I think tonight we answer most of the question.
All right. Okay.
Okay. Before we end for the webinar, do you have any
Mm.
closing remark for our retailer investor?
Pardon?
Okay. Before we end our webinar tonight, do you have any closing remark want to share with our investor?
Oh, so I think one thing only I really looking forward that everyone can help. No, I think after today's session, I hope that you understand who is ICT Zone and what we are doing and how we are generating the profit and how we are able to consistent grow, right? Our business, and hope you are giving us a support. If you are yet be our investor, I'm sincerely welcome you to become our shareholders, and help us to grow, right? So, and do lastly, remember, ICT Zone is just not a pure tech company, but we are also a technology and financing company. Thank you.
Okay. Thank you. Thank you, Tommy. And thank you, Mr. Phua, for tonight's presentation for ICT Asia Zoom Berhad. Okay.
Thank you. Very
ICT
good
Zoom
night
is
to
okay.
everyone.
And once
Yeah.
again, congrats on
Thank
your
you.
upcoming listing on the ACE market on 3rd of June.
Yeah. Thanks,
Okay.
Shane, for hosting us today.
Okay. Thank you, Tommy.
Thank you. Bye.
Night.
Okay. Bye.
Thanks, bye.
Okay.